So I'm happy to welcome all of you to our third Capital Markets Day here in Frankfurt. And I hope that you all have taken your something to drink. There's cakes coming and food. And maybe when I was here and I was thinking about this Mutares story, how I built it up, I was a bit proud to have this super nice location in Frankfurt with a rooftop for this Capital Markets Day. And we will have a very challenging day and exciting day today. We invited our country heads and we invited a guy called Philips Lang, who's, can you hold on your hand? And all the country heads, can you just show where you are? Just put your hands up. So we have the head of the Nordics, we have the head of Spain, we have the head of Italy, and the head of France here. And for you as investors, I think this can be really interesting to get these guys knowing. For this is not only a German-based company, this is really an international company. We do have also the CEOs of 3 companies here who will present today their companies. And this is also very challenging and exciting to listen what they are doing and how they perform and restructure the business. We have today nice speeches from different people, but in the evening we would like to have a dinner and a party with you with this rooftop. We have a DJ, so I think this will be really a nice event. And being the founder of Mutares, I always worked for big corporates. So I was in charge for the restructuring of small groups within big corporates. So I started at L'Oreal Group, then I went to Escada, and I was called someone like a task force manager, or I was called the head of M&A. I was always a restructuring guy. And what does this mean? So once I was running a perfume company, and I had to close down a factory situated in France. Or I brought production from Western Europe to Eastern Europe. I had to exit the US market for it was too expensive. This was my former life. And then I was head of M&A of Escada. And I had all these underperforming assets, which I had to sell. And as a group, you have 3 choices what to do with these underperforming assets. The first thing is you can try to do the restructuring yourself. The problem is that in these companies, the good managers have all left, right? You want to restructure a company, and let's say you have a company with 100 million in sales, but 10 million of losses. You don't find the right managers. That's why in many cases, I took McKinsey guys, I took the Roland Bergers, and I took external interim managers, which cost me a lot. And I always calculate to restructure this company takes me at least 3 years. 3 years of losses I have to invest if I go for restructuring. And it's so complicated. To restructure a company and to do a social plan for a small unit is so complicated, for you have the works council of the entire group. And this is the first thing that you can do. The second thing what you can do is to close down the factory or to close down the company. For if the losses are ongoing and there is no opportunity to grow to the positive path again, then you have to close down. Closing down a plant for a big group is in many cases simply impossible. So we will have today Mathieu Perry, who is running 3 plants that we just acquired from Magna. And if you imagine you are Magna, a worldwide leader for automotive supply, and then you have these 3 plants based in Germany. 3 plants really underperforming. But you have the same customers, right? And Magna sells to BMW, they sell to VW, they sell to Daimler, but not only with the 3 plants that we bought, with all of their plants. And the problem is they cannot close down the company. Why? For then they're influenced with the other plants. And then Volkswagen comes to you and tells you, you're not allowed to close. And then, third opportunity, and that's what is M&A, you sell the company. And you sell the company to someone who takes over the liability and who brings it back. And it was in 2008, and I was sitting on my kitchen table together with Wolf Cornelius. Wolf Cornelius is today advisor to the board. And Wolf told me, Robin, you are the entrepreneur. for you identify with these underperforming assets so much. And you know what is really missing in these companies? In these companies, the entrepreneur is missing. But if we, and Wolf said it to me, I make the production for you, and you are the CEO, if we buy these companies together, I tell you, we can change all of these underperforming assets. For what is really missing in these companies is the entrepreneurial spirit. And then we started Mutares. And the start of Mutares was that I went to the big corporates, and I asked the corporates, the first company I bought was a company called Zicara. 5 million euros in sales, but 2 million of losses. And I asked Uvex Group, who are producing these ski goggles, I asked them, can you sell me this company with a dowry of 3 million? And I got this 3 million to make the turnaround. So our business model in the beginning was, I didn't have to pay high purchase prices. I only invested 300,000 in the company. This was the start of Mutares. I didn't need a purchase price. I only need €1, and I got a dowry to do the restructuring. And then you enter with entrepreneurial spirit. What does it mean, entrepreneurial spirit? One of the first companies that I bought was FTW. This was a supplier, an automotive supplier, based in Leipzig. 15 million, 5 million of losses. And we had a very nice location there, a very nice building, just built up. And there was really a pool with goldfishes. And there was, in each of the floors, there were very nice flowers. And imagine the company cash losing so much. And we invested 200,000 for the gardening. And I told the guys, listen, we are an automotive supplier. It's even not good to have such a building. For then your customer will ask you, you cannot afford such a building. What we have to do now is, I love flowers. I really love flowers. But what we are not going to do is that we pay 200,000 for this gardening. If we want to have the flowers, then we make it by our own. Then we care about the goldfishes, and we care about the gardening. And that's what we did. We had another company, Elastomer, which is still in our portfolio. And all the engineers, it was really dirty. In many of these companies, what we do is cleaning them up. Cleaning them up can be very basic. And in this company, what we did is we asked the engineers, so the guys who are normally only sitting on their desks, and we asked them, okay, on this Saturday, we will go all into the office, and then in the factory, we will paint the factory. I bought color, and then on the weekend, for no price, without charge. And of course, this is not a big cost, but it brings identity to the company. We once, and I think Mutares today is the quickest running private equity company, for we are buying one company a month. And I once asked a guy from it's a lawn mover company which we bought, Sabo. Sabo, they produce lawn movers in Germany. And I asked Lars Daniel. Lars Daniel is the CFO of the company who was there before. And I asked him, why did the seller, which is John Deere, why did they sell to Mutares? What was the reason? And then he said, well, you know, Mr. Like, there were guys coming, all your competitors came, and all with a black S-Class of Mercedes. And then everyone in the company was cash losing, right? 10% cash lose at least. And then they all said it's only a growth case. We have to grow the sales in with this lawn mover company. And then Johannes Laumann came, together with Florian Krapfel. Florian is also here today. He is running, by the way, the M&A business here in Frankfurt. And Katharina will run our Vienna business in the future. So they came in a white Golf. They came in a white Golf, and then Johannes told them, well, it's not a growth case. What we do here, it's very easy, we have to cut cost. And that's what Mutares does. We cut, in the first moment, we cut the cost. This is key. We are not the guys who bring the sales up in the company from day one to 200%. In the first thing what we do is we put in a cash manager, and we look on the cash position of the companies, and that's what we also as a board, this is our key reporting. All of our countries, they have to report to us how much cash is in the company. And then a year ago, we said, why is the share price not developing like we want? We always had a market cap of 150 to 200 million. And I was wondering, what can I do to make clear to the market that our company has a much higher value? And at that time, we said we have to define that we concentrate on the holding. For if you go to Bloomberg, you see our consolidated sales. And if I buy a company which is underperforming, then you see all of a sudden the EBITDA is negative of the group. But this has nothing to do with the performance of Mutares. The performance of Mutares is the performance of the holding. And that's why we said, okay, let's do the following. And that's what we explained to you exactly 1 year ago. We said, we want to make this company to a 100 million net income company. And we said, when do we want to achieve this? We said, we want to achieve this in 2028. And you all saw the press release. We believe this will happen much earlier. This will happen in 2023. And where does our profit come from? And this is the basis of Mutares. Our profit has three sources. The first source is consulting income. When we met last year, we only had 40 employees who were working in the consulting. Today, we talk about almost 100 people who are going in the companies as consultants. And this brings us already this year 50 million of revenue. And what is important to do with these consultants? For one of the consultants is charged by 500,000 euro in a company. It is important that you grow. That's why we need to buy so many companies, for we want to send the consultants in. And that's why we are buying one company a month. And we said, okay, the first thing what we do, we grow now this consulting income. And we said until 2023, consulting income will be 100 million euros. And this is recurrent and profitable business. This is the backbone of Mutares. The next source of profit is dividends. If a company is turned around, we take dividends. And the third source of profit is exits. And what we showed this year, we bought in this first 9 months 9 companies, but we also exited 6. And all of this, we said, out of the consolidated sales, we want to have at least 2% net income. That's what we showed in the last years. So when we had 1 billion euros in sales, we always had 20 million of profit. And that's why we had our guidance about the distribution policy. And as we are now growing, and we have now annualized sales of 3.3 billion, we talk about a company which has reported sales of 2.4 billion. That's why we came out with a new guidance. We said we will achieve between 45 and 53 million in net income on the holding. And our target is to bring this up to 5 billion until 2023 and to have 100 million net profit in the holding. We always have to think about the company today has only a market cap of 460 million. This is what we are talking about. So you see that I think there's a lot of potential here. And for us, this is the guidance that I gave to the team. And by the way, all of these team members who are here, all their bonus is linked on net profit of the holding. This is what Mutares is about. We have to look on net profit on the holding. And we said, if it comes to these restructuring assets, we must be the one who are the chosen one. First in mind, first in choice. And how we did this, and how we did the growth after the last year, will be explained now by Johannes Laumann, a guy who was running as a CEO the company Donges, a 30 million company, and he developed it to a 400 million company, which is really profitable today. And I would like to hand over to you, Johannes.
Thank you very much, Robin, for the quick intro. Also, warm welcome from my side in this beautiful location. I think this location is a little bit the sky's the limit, and I would conquer that phrase also for the success path of Mutares, which we started, and it's just started. I would like to take you in the next 10-15 minutes through the journey, through our plans, what we did and what is going to happen next. quick introduction to me. I went indeed to Mutares in 2016, became board member like 2 years ago when we conducted our first Capital Markets Day. And I think part of the success story is the team spirit we have. The guys you see here today, which are the senior management, the country heads who run the business in the countries. The M&A business, but also taking care of the portfolio development together with me. And I have to say, this is a complete team effort. We are presenting here, but this is an absolute genius team effort we did in the last 2 years. We continue to do, and that's the secret, the DNA and the secret of this wonderful growth story. The guidance we have upgraded from 3 billion to 5 billion towards a total turnover of the holding of 200 million and towards the 1.8 to 2.2% as a profit level, which consequently, if the math is right, results in roughly 100 million of net profit in the holding. So this year our guidance is between the 43 and the 53 million. Our target for 2023 is in the range of this 100 million. Next year guidance not given, but of course you want to close the gap between this year and 2023. So overall, we talk about a bucket of profitability of roughly 200 million in the next 3 years, which in our business case, and I come to exactly how we work, how we do it, a result is very, very close to the operational profitability, the operational cash flow. A little bit more details to the growth story we have. So we want to grow on the turnover of the group. We want to also grow in geographical location. This was one of the drivers also for the growth. We opened a new office in Stockholm, which Carl took over, former MD of EQT. We opened a new office in Madrid, which Santiago took over there in the back, former guy from Alantra. And we have now selected a guy, opened the next office in Amsterdam to be part in the Benelux region, which we believe is a very, very good region to do business in. But you have to be at the spot. You have to be local in order to strike the transactions. And then we want to grow in the consultancies. So we are currently planning for year end around 100 people, so 95 to 100. And we want to double them because it's just a linear growth story. The more companies you buy, the more consultants you need, the more consultants you put in, the more revenue you charge, the more revenue you charge, the more profit you make. So this is a quite linear calculation you can do. We want to grow in the number of the companies, but not proportional. So we don't want to be the guys having 50, 60 companies. We want to have companies which are bigger than before. And this also led to the fact what we changed 2 years ago, that we are looking for this platform investment, what Robin said. We go and ask in a carve-out situation for a dowry, we pay a little purchase price or €1. This is 2/3 of our transactions. 1/3 of our transaction is a buy and build story. And later on the Terranor group, which David will present, you see this buy and build story, which means we strategically add businesses, we strategically add geographical locations, innovations, products, in order to increase the value of this company. And on the platform side, what we have changed is we bought bigger platforms. You will see later on Marc Tenard, the CEO of La Paire, our biggest transaction, close to 700 million in sales. You will see LMS, which are the 3 Magna plants, close to 400 million in sales, which Mathieu Perry will present to you. And the change of this transaction is you can send in more consultants. The dividend capabilities of those large companies, of course, in absolute terms increase compared to smaller ones. And last but not least, and this is part of the transaction, competition on the larger deal is way less than on the smaller deals. The flip side of it is that on larger deals, you will be asked for skin in the game. So on the first Iscara transaction with 5 million in turnover, there was no question on skin in the game. On La Paire, if you ask Saint-Gobain to inject 245 million in a company, you can't just come with a nickel and ask them, very happy, can we close? So they want to see skin in the game. They want that we as Mutares also give support, commitment to the company in order to get it. At the end of the day, you get a transaction done where we have skin in the game. On the opposite side, we receive a lot for free, and we have the ability to turn around this company. And you will see that later on when we speak about this. I want to be first in mind, first in choice. And the Magna transaction is a very, very nice transaction to state what I mean with that. As Robin said, they wanted to give it in good hands. This transaction was not an auction process. We received a call from Canada to Munich. The Canada guy from Magna told us, we have screened the market. We understand you're the guys who can run this business. We don't want to take any risk on the rest of the Magna business. And we would like to sell it to you. So there was an option, sell it to us or keep it. And this is what we want to strive for, because this reputation, this is trust in the market. And this is one of our key success factors, that we have the trust in the market from the large corporates in order to strike those transactions. When we talk about the growth path of these large transactions, which of course will boost, and I'm very certain, to the 5 billion in 2023. When I look at this, we also want to have at any time not only the buy side in focus, but also the sell side in focus. We want to have the complete life cycle of it. So what does it mean? At any time of the economical cycle, I would like to have the opportunity to make a good buy side shot, but also make a good sell side shot. And we separate the three segments we're operating in. So we have automotive, which is a very early cycle business, meaning when economy goes down, that's the first to hit in the portfolio. But that gives us buy-side opportunities, right? Because we're facing these stressed assets. The second one is a late cycle. It's project business, construction business, it's equipment business, where we have long lead times. It's the last to hit in an economic downturn. It's the last to recover. But at a certain point in time, you have a very, very good position to sell the companies, because order books are loaded, profitability is there. So also there, opportunities, buy and sell side at any time on the economic cycle of this. And then we have goods and services, which is basically a sector where we have products, where we have a value chain behind those products. And those are products which anybody in the world needs at a certain time in life. La Paire is one of this. So at a certain time in life, you buy a kitchen, you buy a bathroom, you buy a window, you buy a door. A lawnmower. Whatever the economic cycle does, the grass is growing, you need to cut the grass, right? So you need at a certain point in time, you need to cut the grass. So this is for us kind of the basis. So there at any time, that's only up to us. At any time, we have the opportunity on the buy and the sell side. And the split is roughly a third, a third, a third. And this also drives the basis of a very, very strong performance on the buy and the sell side and on the transaction side. When we look at those transactions, and I have said 2/3 are those platform investments where we came from, and 1/3 are the add-on investments. We roughly look this year around 300 projects a month. Last year it was a little bit above 3,000. The increase predominantly came from the 2 new offices in Stockholm and Madrid we offered. The rest of the market is still at the same level. Very active. At the moment, we look at 71 projects in our pipeline. And pipeline means that we really work on the project. So we have received information. We are in a data room. We have put up a model. We have done or planned management meetings. We have done or planned expert sessions. So we're really deep diving. Does not mean at a certain point in time that we buy all these 71 projects, which I can assure you we will not. But this is our pipeline, 71 projects. This pipeline consists more than 9 billion of turnover, what we currently look in our 8 locations. So the pipeline is full. This is a critical factor for the growth, a limiting factor for the growth. If you don't have a pipeline, you can't grow. We clearly have a pipeline. It's huge, it's big, and later on you have the chance to talk to my country heads. They will tell you there is no beach time. So there's a lot to do. The second critical factor is the growth on the consulting side, the growth of people, the growth of the number of people in order to get more revenues on the consulting, on the first stream income of consultancy. You see a very strong growth which we conducted. In 2018, we were like 25 consultants. I think if I recall correctly, I was number 7 or 8 when I joined Mutares. We will come to 100 consultants and this will be doubled. We have absolute, with the growth we had, with the brand image we had, we have around 15 applications per consulting job we offer. So we are a brand in the market. People would like to work for us in all our destinations. It's not a German-based consulting firm. The majority of the consultants we hire are outside the DACH region, are in the countries, in Italy, in France, in Stockholm, in Madrid. So the second limited factor is not there. We have the growth in the consultancy. We can hire actually 15 times more than we need. So this brings us to the point that for us, almost the sky is the limit, because it's a very scalable thing. If you can feed with deals and if you can feed with consultants, you automatically grow the business. And when we grow the business, of course, we want to have a return. And the return comes in different steps and different phases of the life cycle of a portfolio. So in the beginning, we have the acquisition. There's no return. There's sometimes painful because we have to put skin in the game, like Lapeyre, where we put in 20 million in order to make the transaction. Like Magna, where we had to put in 10 million in order to make the transaction. Or we do a buy and build strategy where we had to purchase, where we have to pay a purchase price. The last transaction we did was an add-on for our Kiko company. They do locking system out of metal, Kiko. That was the company we had, 100 million in sales, big manufacturing site in Poland, and a sequencing hub in Mexico. And we add to them a company from a Chinese governmental controlled organization. So there was a decision taken somewhere in China that this company has to go. They are doing aluminium locking systems. And they are not working for Volkswagen, they're working for Daimler and BMW. And they don't have a plant in Poland and in Mexico, they have a plant in Germany and in China. A perfect strategic fit. The company, at around about the same size, 100 million plus, is doing close to 10 million of EBITDA. There is no debt, 40 million of equity. Of course, you have to pay a purchase price for that. But if you pay a purchase price which is less than 2 times your EBITDA, you did strike a damn good deal. And this is an add-on acquisition. So the add-on acquisition, realignment. Realignment is the phase where we make consulting income. That's the moment when we step into the company with a bunch of people. And with Lapeyre and with Magna and also with Terranor, it was around 10 people we sent in all disciplines in the beginning. So that's where the first income stream of consultants is huge. In the optimization phase, the income stream of consultants is less, but the portfolio dividend starts because the companies are turned around, they are break even. So they can dividend in case there is excess cash and in case there is equity. So here, less consulting income, but dividend income. That's our recurring income. We can plan and we know exactly where to go. And the last phase, of course, is the one who closes the deal, divest. So we have divested in this year. The 3 largest divestments was, of course, the SDS Group, was Nexiva, an Italian postal service, and was Balcke-Dürr, which is part of Balcke-Dürr Rote Mühle, which was actually a deal we signed here in this building, unfortunately a couple of floors below. Didn't have the great view, but the same building. So we closed on the harvesting side. And what is important to understand, throughout this life cycle, whatever we have invested in the acquisition phase, I want to have my money, my invested money, 7 to 10 times back. This is the target. And this is how we make the decisions of an acquisition. Even though we inject 10 million, can we get at least 70 million back over the life cycle, over the stages? In Lapeyre, we invested 20 million. Can we get back 140 million on this Lapeyre transaction over the period? And only if the answer is yes, we will do the investment. When you look at the companies we have on the life cycle, and now I'll go a little bit more in detail of it, you see that typically the realignment is the one we bought. The optimization is the one which we have more than 12 months. And you see here exactly the work we have done on the buy side in the last 2 years, where we bought 1 company per month. Because those 2 phases are filled up quite heavily. And then we have a harvesting phase with Keeper, Bexity, and the Dongus Group, which was my baby when I started my Mutares life, which are in the harvesting phase. So here we hardly have any consultants. But this company, like the Dongus Group, is contributing 25 million of EBITDA. So there is dividend capacity. And there we are in a position to say, do we want to divest? There's no pressure to divest, right? We are not a fund. We can divest when it's the right time. Or do we want to keep the company and enjoy annual dividends? And that's the harvesting phase, where you have profitable companies. And over this life cycle, and that's how we watch it, we want to grow the company from the bottom left to the top right. And somewhere on this way, until it disappears from the screen, we want to have gotten back our money 7 to 10 times, which we have achieved with the last 3 exits we did, Nexiva, STS, and the Rote Mühle Group. I'm happy to take any questions in the meanwhile. If not, I would flip to the half-year financials. Questions are easier if you have a glass of wine or a beer or something in your hand. So we'll do that later then, though. A quick look on the financials of the half year, which was presented the previous week. I think what is important to understand, the total holding revenues are the consulting incomes. And they grew in the first half year by more than 50% compared to the first half year of last year, which means our consulting income has grown by 50%. And this, of course, is in relation to the growth of the people, because you can only charge someone if someone works in there. And the growth of the consulting income is pretty much proportional to the growth of the revenues, which you see here, which grew from 620 to almost 1.1 billion. This is a very plannable, proportional income stream we have. And then I think what is important to understand, we have a bargain purchase of 455 million. Bargain purchase is something we got as assets, cash, real estate, whatever it is, and we didn't pay for. So majority part of this is the Lapeyre transaction, I think I'm looking at my CFO now, 370 million roughly. Bargain purchase of Lapeyre, where we paid €1 for, we injected 20 million, and we got assets of more than 370 million for free, which we now have to use, some of them, in order to turn around the companies. But this is the result of the negotiation. And then the employees, more or less also proportionally in the group, grew compared to the revenues. I think the growth we had from 2019 to 2020 was exactly 50%. So we grew from 1 billion to 1.6 billion in sales. We grew from 22 million of net result to 34 million of net result. This year, we expect to be from 1.6 to 2.4, 2.5 billion in turnover. And we expect to grow from 34 million in net result to 43 to 53 in net result. It's again the growth of 50%. And the pipeline is full. I think the team I have, I'm very proud to be part of it. That's a winning team. We win. And as I can tell you, we have a lot of things ahead of us. I think this is a path where really the sky is the limit, and where I'm happy to take you all on this journey. And as we do a deal per month, there is also a lot to catch up in the next weeks, I promise that. And we are fully loaded and energized to make all of this happen. Thank you very much for the attention. And even though you don't have wine, beer, and a drink now, if there are questions now, you can shoot. Hold on a second. I think we need to pass the microphone so the people who are online can also understand it. Here.
Mein Name ist Rüdiger Holz, einmal grüß Gott.
Hallo.
Dürfen wir auch Deutsch sprechen?
Absolut.
Oder sprechen Sie nur Englisch?
Ich spreche sogar Badisch.
Dann ist es gut. Wenn ich mir Ihr Portfolio ansehe, ist es natürlich ein breiter Fächer von Industries und verschiedenen Branchen. Beispielsweise die Dönges, eine extrem starke Heritage, aber auch zyklisch. Wie gehen Sie mit den verschiedenen Branchen um?
Also, danke für die Frage. So I think I translated for the people there. So the question was, we are in different segments, and of course there are cyclical movements in those segments, economical movements.
It's the cyclicality of the business.
Correct.
I was asking for how do you manage?
Yeah. I think on the day-to-day business, so Dongus is quite easy to answer because in the construction world and in the building industry, at least the commercial side where we do in Dongus logistics and data centers and battery factories, so there was no cycle. It was like just a flat top line in the last 2-3 years. But what do we do? I think it's indeed, and you have these cycles in all of our segments, but as the segments are differently hit in the cycles, I think we always have a good balance on it. And how do we approach downturns? I think that was the core of your questions. I think I can give you an example how we approach it on maybe 2 of our portfolio companies. We have a portfolio companies which we acquired in February 2020. And they were doing napkins for the German and the French market. 50 million of turnover, it's close to Cologne here. February 2020, a company acquired with napkins. We closed the deal. We signed the deal end of 2019. At the time we signed the deal, I have never ever heard about the word COVID. Now, if you have a napkin company, first market restaurants, second market canteens, third markets festival, fourth market airlines, and the fifth market a private household, and COVID and lockdown hits the fan in 2020, and then again in 2020, beginning 2021, and then you always have to go back, and then the water came because it's on the river in the area where the flood took place. Then you know you have a problem in this company. And the turnover dropped from 50 million to 20 million. So what do? We supported this company. I mean, as Robin said, we are not the guys making, the purple and pink growth story of i.e. push up revenues. But I think we are maybe one of the best, or there is no better one in controlling costs and in cutting costs and driving it on the edge and on the limit as long as you can. This is what we do. And if there is a need, we also from case to case decide that we as a holding jump in with a bridge loan of a certain period of time. And we believe in this company, right? Similar situation. So in the case of the napkin business, we injected a 6-digit number of bridge loan. Another situation was an automotive company called Primotex. It's a company doing 130, 140 million in total sales today in Italy. They're normally on a level of 11, 12 million turnover a month. I recall, and Mathieu Perry was involved in that, who is now doing the Magna thing. I recall the month of April 2020. The normal turnover of 11 or 12 million was in this month 24,000 euros. So it was a turnover drop of 99.9%. There was no turnover because the complete automotive in Italy and the customer base was shut down. There, we purely attacked on the cost side. Until today, we have not injected a single nickel there. We have the cost managers. We have the guys on the ground who can fight this situation. Of course, you go and do for short-time work. You speak with the unions. You try to find a settlement. You speak with your suppliers. You speak with your customers. I mean, there are all kind of things. And a matter of fact that, as well Robin as myself, we were the operational guys. So we were running companies. We know how it feels if you look in an empty pocket and have to pay your suppliers. We also know how to handle this situation, and we know, and we help, and we talk to them. And in the in the first lockdown, we had situations which were quite tough. We did start more or less to micromanage. We talked as a board every day to every portfolio company. Every day to every portfolio company in order to overcome the situation. I think this is what you have to do. You don't have to be somewhere here and waiting until the money comes up. It's hard work. It sounded very nice what we said, but it's not that we are somewhere on the beach and waiting until it's Friday and we go back to our families. So it's hard work from Monday morning, 3 o'clock, until Friday evening.
Maybe to add. So we've seen many different situations, and we buy companies where the circumstances are really tough. You have to imagine we buy companies where quality is an issue, where delivery is an issue, where the price is too high, where the supplier is annoyed, where the customer doesn't pay you your bills. Incredible situation. Then you have unions and all of the people, they want to stay on board and need more salary increase. Really tough situations. And then COVID came. And this was the time where I was, the first time, I'm doing now 20 years of restructuring. This was the first time of my life where I thought, this can be dangerous now. And then I saw what this team is able to do. I mean, we talk now about a company with 150 people. 150 people of this 100 operational guys. And these guys working all weekends, traveling to the factories in COVID times and trying to do everything to make it happen. And today I know, if you survive a COVID time like this, I know that this growth will come. And this is identification with the company. This is people who are really working nights and hours on the weekend just to make it happen. And we did one transaction a month. You have to imagine, what does this mean, transaction? Transaction normally means you're sitting here in a PwC office with 20 lawyers, and then you're working hard hours here. But this couldn't happen anymore. So all of this happened by a screen. So we negotiated one deal a month on a screen base. And we signed, even we couldn't go to a notary, for it was forbidden. Today I know the substance of this company is really strong.
More questions?
Hello, my name is Jan-Robert Schut of Crypto Academy in the Netherlands. Thank you for having us invited here in this beautiful building. I got a question. I've been checking the dividend frequency. It is 1 time per year that you are giving or providing dividend, 1 time per year. First question is, why is that? Is it because of the history? And second question is it also in the future possible that you would increase the frequency? For instance, 4 times per year or even monthly. I ask that because, as you know, that the Yankees or the American investors do like investments in dividend-paying stocks. So, is it also on the table, maybe in future, or you cannot say that? Thank you.
I think it's quite easy to answer. So, it's not a discussion point today to increase the frequency of the dividend. We had this dividend, which is normally paid out after the annual meeting, and it's, well, I'm looking at the main shareholder. We have never talked about this, or we have talked about it and decided not to do, but it's actually not on the table. We have no plans to do that or to change that. You know, our business is, on the other side, our business is quite flexible. So if you can't adopt and if you can't be agile, Mutares is definitely the wrong company for you. So saying today that it's not that we have no plans to do that, it can change in the near future or mid-future at any time if we believe there's the right time for the right things to do. And that's what we do every day on transactions, every day on operations. When we believe it's right to do it now, we just do it now.
Hello, my name's Ottmar Wolf from Frankfurt Asset Management. You had a very positive story, and I would believe you, but I'm a credit investor, and so I always try to turn the things around. So let's try to have a bit a negative view. What are the main risks? How could we destroy this positive investment case? What has to happen? Thank you.
I mean, COVID tried. Lost. I think I try to point out the two critical factors of limited growth. The first one is you don't get deals. The people who are responsible for the sourcing are too good. So if there are no deals and if we can't, if we can't feed the dragon at a certain point in time, the dragon will die. The second thing is that you can feed the dragon with deals, but you can't execute them. And so this is the critical path on limiting the growth. The structure we have on each of the transactions, that we have a single SPV per company, limits that the losses from a portfolio company will go up to the listed vehicle. So I say normally when I talk to internally and talk to our guys, I said it's quite easy. Money always flies from south to north. It never comes from north to south. And I think this is, with the structure, we avoid and we do a risk mitigation and a ring fencing. And then the third part is, I think it would be very unhealthy if we would focus on one segment. So if the complete pipeline, for example, would be automotive, and automotive would be 80% of our portfolio, you can have kind of a consolidated risk on this. But I think as long as we have a good split between the three segments, as long as we can feed the dragon, and as long as we can execute the food, basically, there is no limitation in growth.
Maybe to add, what could happen is that we lose our DNA. And I once had a company, I was a CEO of a company producing ashtrays and cup holders for BMW and VW. And I hired a guy, and he went then it was in Germany, it was then in Lüdenscheid, this company, and he went with a Porsche 911. He was a former McKinsey guy, and he went to this plant, and he simply said, I will close down the plant. And then there were unions and red flags, and they had to mediate the situation with the unions and the Works Council. For us, it's important. It's not important whether you're a receptionist, whether you're a worker. We have the feeling that we want to make everyone strong in the companies that we buy, and we want to stay with the people. For us, the success, and that's why I repeat this is the people here. And if we have to stay modest and we have to know what we are doing, we want to restructure the company. And if you do not keep your mentality, for here's always a lot of money involved, and you have to keep your word, and you have to be on the right side. That's why, for us, ESG is really important. For we do care, and this is something which I believe, as a founder, is key. Also to give this spirit to the people. For we have many competitors who are completely different, and the people sell us the companies. I told this situation with Sabo. They sell us the company as we stay modest, and we went there with the white Golf.
I think that was it.
Hallo, Christian Ratajczak, Dexteller Invest aus München. Erstmal Glückwunsch für die tolle Entwicklung der Mutares der letzten Jahre. Ich habe eine Frage zum Thema Deal Sourcing, und zwar die limitierenden Faktoren. Oh, sorry, I can speak English. Sorry, Christian Ratajczak, Dexteller from Munich. Congratulations to the development of Mutares. I have a question regarding the deal pipeline and deal sourcing right now in this environment, and also potentially regarding an outlook for the future. What is the limiting factor? Is it the money you have to inject and therefore getting bigger and bigger, or is it do you see in the deals coming that there's less growth potential, or is it the opposite? And would you expand in other sectors in case you go the path in the next years and get bigger and bigger and bigger also regarding turnover. So which are the limiting factors for you? And then another question was regarding what Mr. Like said regarding the DNA, but probably something for later for a glass of wine. How do you get the DNA, the Mutares DNA in the different countries to the people and to the workforce, to the consultant? Thank you.
Yeah. Actually, this is a brilliant question to give to my country heads to answer, actually. No, I'll try to answer it. So what is the limiting factor? I think the limiting factor is flexibility. And indeed, when we go for transactions, as I said, like LabPair, like LMS, where we have to put skin in the game, or we go for this Chinese thing which you buy below 2 times EBITDA, we want to be in a situation where at any time we can strike the right deal. So yes, there is a limiting factor, which can be named money. If you have a deal pipeline which grows and if you have a deal pipeline which is big. I believe that in countries where we mature, like in France, like in Italy, like in the DACH region, where we are quite a long time, that in our spot, we do see every single deal which passes a table and a notary. So in these countries, I'm sure we see every deal which is on the market. So the limiting factor is not to see the deals. I think the only limiting factor can be the flexibility to be at the right time, at the right spot in order to shoot the deal. And this happens much often for reasons which is very difficult to understand. So I understand, for example, on this Chinese deal, at a certain point in time, I was negotiating with the party, I think. But they had to report at a certain point in time to a certain guy who was expecting to hear the deal is closed. So if you say, well, it's conditional to finance, you can just stop because it's not going to happen. So I think the flexibility is the limiting factor. How do we put the DNA? I think, and I'll give you an example, I think, which describes it a lot. For the first time after 2 years, we have made an offsite a few weeks ago. And we invited to the offsite all Mutares employees, and all, including the supervisory board, etc., etc. So we invited 147 people, and it was still in the holiday period of the south of Germany, like Baden-Württemberg and Bavaria. And out of the 147 invited people, 141 came. And I think the DNA which we transport, it's just that leadership lifts Mutares, leadership lifts the DNA. They see we are not fighting each other. We act as a team, we win as a team. I can also say we lose as a team, but it happens not so often compared to the winning part. I think the team spirit we put there, and also the way that it's a very professional company, and we have very professional structures you have to have when you are 3 billion and above and want to grow to 5 billion. But at the end of the day, I think our decisions are always made with a human touch. And I can say that because, before I joined Mutares, I worked for Atlas Copco, which is also very professional stock listed, but the Wallenbergs are behind. It's a family company. Therefore, I worked for Porsche, which at that time, it was not Volkswagen, it was the other way around. Porsche tried to acquire. It was also a family business. So very professional. We go the path of success, but with a touch of human sense and of logical sense. And I think this is a little bit what I perceive as senior management, how we transport the DNA. Maybe after then the first or second class, you ask my people, and hopefully you get the same answer.
Well, first of all, congratulations for the success of Mutares. It's really a success story. I have a question which you didn't touch before regarding the valuation of the share. When I look at the numbers, if I get the numbers right, you have a market cap of about 420 million, and you have a guidance of 43 to 53. So the PE ratio is something short before 10. That's rather low valuation. What would be your view on this low valuation? What is, of course, the upside potential for the share price?
The issue is that some of our lawyers are in this room. So it's difficult to answer that question without a glass of wine.
Andreas Wiegand. Wenn ich mir Ihre Landkarte auf Ihrer Präsentation anschaue und die Voraussicht bis 2023, dann betrachte ich die einzelnen Standorte in Europa und komme natürlich insbesondere aufgrund Ihres Hinweises zu Covid auf die Idee, es könnte ja sinnvoll sein, dass Sie Ihre Landkarte auch auf Bereiche außerhalb Europas erweitern, dann insbesondere, wenn damit Lieferketten, welche unterbrochen wurden oder zerstört wurden, damit wieder aufgebaut bzw. aufrechterhalten werden können. Haben Sie so etwas bereits im Sinne?
Yeah. The question was, when you look at the presentation and the guidance of until 2023, we are talking of expanding our geographical footprint into Europe. So on the presentation, I think it's somewhere in the middle. We said we want to add 3 offices. We said Helsinki, Warsaw, and Amsterdam. And the question was if we also could imagine to go beyond that or growth, not in Europe, but maybe overseas, east or west, was not specified. And the clear answer is yes. Will it happen until 2023? We have no concrete plans yet. However, if the opportunity is there, and I believe, for example, and I'll give you an example, the US has a good and a bad. The bad in the US for our business model is it's super easy to restructure. Because you go there, you tell the people, sorry, and you have to pay the wage until lunchtime, and then they go home. And then you have restructured. You know, I overrate it now a little bit, but it's much easier to restructure in the US than in Germany or in the Netherlands or in the Nordics. However, I think this business model of restructuring, in combination with the industrial approach we have, is something which is needed in the US. And from my experience, you can have 3 sources of deals. The first deal is you go for the poison pills of a transaction, of a large transaction, where you can be the ones taking the unloved child of the business of the transaction. The second one is European companies divesting in America. I can tell you from my history, European corporates are scared to death to shut down something in America to get punished by whoever. Okay, so this is a source of deals. And then the second source of the deals is American corporates mandating an investment bank in the US to divest their European assets where we are. So there is a potential to do we have concrete plans to grow in that direction in the next 2 years? No, but indeed it's another growth potential. I'm still young, so there are plans beyond 2023.
Talking about the restructuring, we saw the change in the insolvency regime in Germany with the introduction of the Starock beginning of the year, where you have the possibility to restructure a company before the insolvency. We saw the first case at Eterna in Germany. What is your view on that, and would that give you more opportunities in the future to get more cases?
I can only give you my personal opinion on this. As you said, one case was done on the shirts. I doubt that it will bring us more deals. Also, typically in our business model, those are not the deals we enjoy too much. The insolvency cases, we are really picky, and we, at the moment, really consider them predominantly as an add-on, so that you have a strategic interest in product, in locations, in customer base or something like this. On the other hand, I think to make the insolvency procedure and do a pre-procedure of insolvency definitely makes the asset more attractive, because pure from a reputation point of view, you don't want to buy a brand necessarily which already was in insolvency. If you're in the kitchen market, you have to because there's no one left. But from not Nobilia maybe, but from a reputation point of view, it's better to have this pre-solvency procedure. Do we expect more deals? Honestly, not really. We see them today as well, and we are not yet the experts in buyouts from insolvency situations.
Sorry, I have an add-on question. In case you have 5 deals on the table with the potential to make 7 to 10 times your money, as you mentioned before,
yes.
How do you decide? Do you go for a platform investment or rather for an add-on in case you have, let's say, more opportunities? What do you do in case money is not enough at holding level?
Okay. I would have said I take all 5, but you're basically speaking
whatever.
of
the question would be, would you rather go for a new platform or would you support the add-ons in case potential is more or less the same? And how do you decide?
Yeah, so actually, this should not appear. If there are 5 deals where I can make 7 to 10 times, and that's what we intend to have. We want to have a firepower where this does not exist anymore. If we have, and you said 5 deals where the potential is 7 to 10 times, we will go for the 5 deals.
Which is, in fact, not a situation which never happened in the last 24 months. Yeah, sure.
Just curious. Yeah, thank you. I'm just curious to know what was the trigger to expand internationally and to have that local presence? Because you've been around now for quite a while, but originally just on the DACH German space.
Yeah, for us, we made the experience, and when we started, my French is quite good. So I did the French transaction by myself. So I went to France, and then I was the restructuring guy. I was doing the transaction. I even didn't take a lawyer. I did the transaction in France in the beginning by myself. And today we see so many cases. We have we have really very strong country heads. And what we see is that, of course, if you are located in Italy, and we had our 10 years jubilee in Italy, and I think really there's no deal that Konstantin doesn't see when it comes to restructuring. I only saw, let's say, 5% of the deals, and that's why we want to boost Europe. And the question was also what to do with the US. And Johannes said he's still young. We want to be number 1, and that we can only be number 1 if you're local, and you will see it today. We also take local CEOs. So in the beginning, I sent German guys to make the restructuring. Today, we know we need to have French guys. I mean, Marc Tenard will present you our biggest company that we have. He's a French one, and this is also very important. If you want to run French companies, you need to be French. I mean, this is the reality. And I believe that with this global footprint, we see many more deals. I mean, 300 deals a month that we are looking at. This can only be sourced locally.
Thank you.
Thank you. So just have a question in terms of your experience and where you learned the most. So you've been active quite all around in Europe, so in many European countries. Can you tell us what is the country when you've learned the most?
I can tell you that end of last year, beginning of this year, it was quite an experience for me to sell Nexive to the Italian government, and at the same time meet for la paire, I think, every union member in France, and I've seen every court in France in the last 18 months. So it was quite a tough time. I have to say where I learned a lot, or me personally, I think the biggest learning was indeed the Lapierre transaction and how the today's CEO of Saint-Gobain, Benoît Bazin, was handling this transaction. I can only imagine how difficult and how complex an organization like Saint-Gobain is. But the way we transacted Lapierre at the end on the commercial side, don't take the process and the press, and I mean this was all good. But the way I think we incorporated the operations team, Philipp Slang was and his team on the transaction side were working, I mean, for months, 7 days a week. I mean, we had all of us had personal crisis at home because we didn't see our kids and wives anymore. And then we had with Mark Tenara guys supporting us. Then we had our operations team. So the teamwork on the Lapierre transactions with all the hassles. I mean, unfortunately, my French is not as good as Robin's, but I can imagine for Philip and the team, every morning you open your newspaper, you see how shitty you are. So this was for me the most impressive journey, and I can tell you I was sitting in our boardroom in Munich when we signed the transaction, and I was sitting there with my head of tax, Dennis, and we were sitting in this room, and we virtually signed the transaction of Lapierre, and we just looked at each other for 5 minutes. We didn't say a word. We were just out of any energy. We just passed, and this was for me the biggest learning, I think. And I said it before, and you remember that because we met in the process. I firmly believe that Lapierre has a very, very big chance to be the transaction of my lifetime. And I'm happy that we got it, and you will hear later on how the company is.
But my biggest experience. So I love Europe, right? So I was working even before starting at Mutares. I was always in charge for the European countries. So I learned Italian by myself, knowing French. Did the high school degree in French, and now I'm learning Spanish. I like these countries, but what is also good for us is that in these countries, labor law is so complicated. I mean, that's why we go there it's not easy to make people redundant, and we have to negotiate 20 times with the unions. And I once wanted to buy a company in France which was called CGVL, and I bought this company. Was 1,000 truck drivers, and we were doing the entire logistics for French Post, for Lidl. So it was the business was quite nice. But then in the due diligence, one of my board members, Christian, who I asked, can you run the show in Lyon? He told me, well, Robin, there are gangsters, the truck drivers, and there's someone who's killed, and they use the lorries for prostitution. And I don't want to go there. And you have to imagine how easy things can be. And then I said, okay, Christian, let's do it together. I will help you a bit. And then we bought this company and we went there together and we made it to a very profitable company. But the reality is that you have to overcome situations which are a nightmare. And we buy, in many cases, we buy companies, and this is not private equity out of Cayman Island, right? We are the guys who are entering the shop floor first in the morning, Monday morning, 8 o'clock. We are there, and this is our business, and we do the hard job. We are not, and you see, Johannes and myself, in this COVID times, we went every day through all of the subsidiaries. We as a board, we had 20 companies, 4 board members, each of us 5. Calling. What we as a board, and this is not. We are asked about KPIs. I mean, I love KPIs. We look on the cash position of each of the companies. That's our reporting. We look how much cash is there and can I pay the salaries. I mean, we are restructuring guys.
Maybe I forgot one of the success was this year that Robin still didn't beat me in table tennis.
But I won yesterday in table soccer.
And that's correct.
Against the French team. This was important.
Hi,
We have a question from online, someone who's watching, our research analyst, Alina Kohler from Hauken Aufhäuser. And her question was, Johannes, you talked about the harvesting phase. So when the company gets to the harvesting phase, you're getting the dividends and bringing them in. What's the criteria that you have for deciding whether to sell the company or just continue that kind of recurring revenue harvesting? Thank you.
The criteria is that we believe it's the right time to maximize the shareholder value of an exit. That's the easy answer. And I'll feed you in an example. We have a company called Keeper. And we had thoughts to divest Keeper because there was interest from the market coming in. And then the polypropylene price doubled in, I think, 4 months. Keeper is a fantastic company, profitable, stable, well-organized, super management. It was the right time, potentially. We believed it could be the right time to divest. Now the raw material price increased, so we believe it's not the right time to divest. So at the end, we need to look at the moment, we need to look at the time, and then at the end, it's that the board decide, okay, if we divest now, that would maximize the shareholder value. And that would maximize the return on our investment. And I think if we don't believe it, or I can say if one of the two of us doesn't believe it, we don't do it. So it has to be a common decision in the board in order to do the exit. Wine. I think it was a very good discussion, and we should continue that throughout the entire late afternoon and the entire evening. We would like to make a break. It says 15:15 here, but also for the digital audience. We will continue at 5:30, so 15 minutes later. So we have a 15 minutes break here, get some refreshments, and we are back in 5:30 with David and the Terranor group.
And enjoy also our terrace. You have a beautiful view from, and it's not raining, so enjoy.
Don't jump.
Who gives me a note when I can start? Otherwise, I just start.
So I'm pretty happy that we have now David presenting. He's in our structure. He's one of the Team 7. What does Team 7 mean? There's a portfolio manager who's running several companies, and he will present today one company which he runs very successful. And I'm happy to listen to you, David.
Thank you very much. So, first of all, thank you very much for having me today and giving me the opportunity to talk about actually two things which, in my point of view, are very important for me personally and also for Mutares. But first of all, my name is David Margula. I'm a director at Mutares and representing Terranor as a group as the CEO and the chairman. Before joining the Mutares success story and the growth story, I worked at McKinsey & Company. In the beginning at the Hamburg office in Germany, and then I was then transitioning to the Chicago office in the United States. I was mostly working in the operations practice, so pretty much to focus end-to-end value creation and optimization along the value chain. And now at Mutares, having the opportunity in working in different companies and being part of the success story to drive it to success. What I wanted to show to you, and that is my two key messages in my presentation today, is first of all, people make the difference. That is the header of the presentation. And the second thing I wanted to show to you is that the Mutares value creation lifecycle works. You will see that as one example here in the Terranor lifecycle. First of all, I wanted to talk about Terranor a bit. Not too much, but this presentation is about Terranor. And the vision of the Terranor group is in perfect conjunction to the Mutares vision itself. So I define for the group the vision of being first in mind in road operations and maintenance in the entire Nordics. So what that means is two things. And these are two sub-targets in between. The one sub-target is road operations and maintenance. And what we focus on is a price-competitive service offering, first of all. Secondly, best-in-class project execution. And thirdly, highly skilled and motivated employees. The second message in this vision is the Nordics. That is obviously in the sentence, and that means we focus on Norway, Sweden, Denmark, and Finland, which is why I'm pretty much connected to Karl Kistenmacher, head of Nordics, in the headquarters in Stockholm. And what you will see when I dive a bit more into detail what actually Terranor does, this is what we do. Pretty uncommon for the Mutares portfolio before. Nevertheless, this is my biggest revenue stream, and that is road operations and maintenance in the winter. We have complemented services. Summer operations, of course, green landscaping, which everybody probably knows and can make a picture out of. Traffic safety, very important for all of us. And besides this, now in Denmark, also sweeping, so road sweeping, which is one of our biggest revenue streams in Denmark. And on top of this, drainage. Many things on top of this. We also build playgrounds. If you want to have some from us, you can reach out to me. I can build your playground right next to your building, if that is desired. Terranor at a glance. What are key facts? That is already referring to the history of Terranor itself. So the history of Terranor itself, and then already referring to the life cycle. Terranor is a very young company. So in fact, it is 10 months old. We started our growth story with a platform acquisition in November 2020. So that is 10 months ago. That was a dowry deal which we did with NCC, one of the biggest construction companies in the Nordics. You can compare it to Hochtief here in Germany, for example. They wanted to sell the business, and there we did the platform acquisition of around about 105 million euros of revenue, which is at the starting point Sweden and Finland first. Center of gravity was always Sweden, and it still is. But what you already see on the right-hand side is the successful, or let's call it proof of concept of a buy and build strategy. Because already after 6 months of the platform acquisition, we were able to, out of the own cash flow, finance an add-on acquisition, which was then Denmark. Same deal maker, Mutares, as the counterpart to NCC, They said, that was a comfortable deal with you, so we want to invest once again, and we want to have the Danish business. And me as the CEO and chairman, we said jointly together with the M&A team, yeah, why not? That is a good deal. Why? It was adding substantial revenues, as you can see. And secondly, it is a net profit business already. So that is not a company in distress. So that adds additional value to our overall business model. We have in total in the Nordics now almost 400 employees, started with 180. So what you see as one key success factor, we are in terms of an organization very lean. So this also gives you the indication the Terranor group is in many ways a bit uncommon to the typical Mutares companies. You will see that a bit later, what I mean by that. My second message, I mentioned, the Mutares value creation lifecycle works is pretty much this what I want to talk about. So you heard a lot already about the realignment phase, the optimization phase, and the harvesting phase. For me personally, it starts also in the beginning and at the end, right? There are additional two pillars, which is a pre-closing, something happens before the realignment phase, and we also target at the exit. So very briefly, once again as a summary, we started in November, then did the typical turnaround program, 100-day phase, this is how we call it internally. We're able to kick it off in March, so pretty quickly. Harnessed a lot of potential improvements, which led to the opportunity that we can buy Denmark as an additional add-on in May. Now what we plan is to kick off a second improvement wave, which you will also see in this presentation pretty shortly in November. When we talk about the pre-closing, Mutares very precisely selected Terranor as part of the strategy. There were a couple of reasons why Terranor was a very great fit and strategic fit to Mutares. One of them is the Terranor group and the road operations and maintenance business operates already in a very stable business segment. So that is why it's allocated to the goods and services department. It's very stable. So for example, what you don't see later is it's completely Corona independent. It doesn't matter whether I have Corona, whether the prices are fluctuating. My key customers are state authorities and municipalities. So this is sort of state spending I'm operating with. So if the state wants to have clean roads, it's independent from any kind of business cycle. The money should be there from the state to operate roads and keep them safe. The second big reason why we bought it is it supports the expansion strategy, of course, into the Nordics. And as you see, we have now a presence not only in Sweden and Finland, we were able to expand to Denmark. The only missing piece to complete the vision is Norway. It is in many ways a bit challenging market, but we are also working on it to make it happen. Third item, why it is important, Terranor, or how it was called before, NCC Road Services, had a very strong positioning already in both countries, in Sweden and in Finland. It gave us the opportunity to work with a substance and build up on this substance. Another reason is, clearly it's along the target range of 105 million euros as a combined revenue for Sweden and Finland together, and now we are building up on this. Last reason, and that is probably my biggest strength here, is we see operational improvements, and we can make the company, which is already good, way better. So that is a good example here. We're jumping now to the realignment phase. So what we do as Mutares, we bring in, as you heard, the consultant team in. That is pretty much kicking off the realignment phase, which we call 100-day phase. We look at all cost items, revenue items, and we try to understand what are the issues, the underlying issues, why this company is hindered to be better. So NCC Road Service was never very bad. They were well-performing, let's call it this way, negative but well-performing. And we looked at data, talked to the management and tried to understand what are the underlying reasons how we can strategically reposition the company for success. We have seen 4 areas which are very straightforward. One is the tender strategy and execution. So that sounds simple, it's actually not, because it means how do we get state contracts, municipality contracts. Competition is fierce, margins are extremely slim. It's a business which is very tough. If you have, in the end, a 4% EBIT margin, you are very good. You are very good. If you have a 4% EBIT margin, that means you have it very stable for the next years. So you don't have to manage like massively in between us, so there's an advantage, there's a disadvantage. We looked at this tender strategy and execution and optimized it. I will talk about it, how we did it, and what the actual reasons are why we are now better in this area. Second item is SG&A. I think it's pretty typical that companies which are in distress and losing money are usually a bit higher in cost in specific areas. And since it was part of a bigger company, SG&A costs tend to be higher in specific areas which you can look at and reduce. And that is what we did. Third item is contract management. This is the actual operational execution of the contract. And that means more OPEX spend, which we have to look at, right? Be optimized in what we do, not the tendering process, but the actual execution of the project. Fourth item is procurement. Everybody knows we have challenges right now on this planet on procurement. Prices are increasing. Procurement is always one of the biggest drivers. It's also 80% of my cost basis. Why is that the case? Because we use subcontractors for most of our work. So business model in different countries are completely varying. It's different, but nevertheless, I tend to gain flexibility, offload risk, deleverage capacity issues by using a bit more subcontractors, which means my total cost basis is 80% subcontracting. So we have to focus also on procurement. We looked at the market and tried to understand where can Terranor actually position themselves in the target EBIT margin in the end. So we have seen competitors, we see what is sustainable. It's pretty surprising. Sustainable margins always are in the same band, and that is between 4% to 5%. And that is best-in-class performance, very stable for our competitors, which is why we said we want to have the same EBIT margin in the end. It must be possible. They are part of big companies. We are a small and agile company. That is our target. That means an improvement of 4.4 percentage points, which at the moment sounds very fair, very moderate. For this business, it is not very moderate. This is very aggressive to improve that so massively. Big reason behind it, why is that challenging? My big state contracts run on a 4 years basis. Now in Denmark, they run on a 6 years basis. So if you tender in the wrong way and your margin is not accurate, you cannot get out of this contract for 6 years. That means you're locked in. On the other way around, once again, what I said, it's a very stable business. If you lock in a margin, which is good compared to the average, then you lock it in for 4 to 6 years. And then you only have to manage the business, which is then the contract management task. This is the impact we already achieved starting November. Transformation program kicked off in March. And this is what we have right now as a result in the transformation program up till now. So that is our expectation till the end of the year, what we see right now. You once again see the big buckets here. First bucket is tender strategy. Once again, improvement of the tenders. How did we do it? We pretty much simply have been more precise in calculation. We looked very more thoroughly in the different cost items. You have to imagine it's sometimes an Excel file with 600 line items. Every line item has to be accurate. This is what we did. How is it feasible to do? We added additional capacity to calculate accurately. It's the second biggest reason. The third reason is we centralized the tendering function. That was not existent before. It was a decentralized tendering process. That, of course, if you want to have a more benchmark-driven tender process to compare numbers, in order to have accurate numbers, you need to centralize functions, and that is what we did pretty quickly. By the way, one of the reasons why my SG&A cost is below target, because I needed to hire some central functions in between. That's not me. I can continue nevertheless. You've seen this slide. The biggest challenge, or let's say the contract management first of all, this is OPEX optimization, and there we go just aggressive in and optimize the OPEX of the contract execution. So there we are talking about which kind of variable cost do we have. We need to rent sites. We need to work on how we spend only those money on items which we really need and don't overspend money. So that is a pretty straightforward OPEX optimization. And the fourth item which you see, and that is the biggest challenge, I think in conjunction also with the development around the world, is procurement. So that is my subcontracting challenge. We see prices are increasing. Subcontractors get more hectic. They also want to secure their positioning, which is why we identified a lot of potential, but so far we had challenges in realizing them. Nevertheless, and that is the key message on the right-hand side, 55% of our total potential at the first half of the year we achieved, despite having these challenges. We tackle these, you will see that later in other slides. A first glimpse of the numbers, and I wanted to compare them first half of this year compared to the last half of the year. I think a couple of key messages is that we were able to increase the revenue compared to the last year by 26%, which is massive. It's a big increase, giving the business mechanics of having long-running contracts. Of course, it's also driven by additional add-ons. More impressively, in my point of view, is the increase in the adjusted EBITDA of 440%. Of course, the percentage is always very big if you start very small, so don't be fooled by this number. Nevertheless, I think it's impressive to see that within half a year we were able to increase the first half-year figures to 2.7 million adjusted EBITDA. First message I had in the beginning, people make the difference. Because once again, this is the concluding remark here, how did we manage to do this? And this is something I firmly believe in. It's people who make the difference in the end. First success factor we established as a Terranor Academy at Terranor. And that means we invest in our own employees to educate them along the business cycle in order to understand how they can be better in their daily life. We try to teach each other. I was not part of this business before, so I'm not an expert in the beginning in road operations and maintenance, so that is why we shared our knowledge with each other. And the Terranor Academy is a module-based education system to teach everybody in my organization how they can be better in business. Because they are all extremely excited in what they do. They love their jobs, going on the streets, doing their jobs. We can teach each other a bit better or how to be better in business. And that is a big success factor. The second big success factor is, of course, the Mutares support team. We brought in a lot of expertise and experience in various areas where my group had some lacks. That's just the case. Second biggest success factor from the Mutares team is, of course, the M&A team. It would have not been possible without the M&A team to do this rapid expansion. I can give you like very small figures, quick ones. The deal in Denmark was done within 4 weeks. So it started, and then the deal was closed after 4 weeks. That would not have been possible with Carl and the team. I was also working a bit on a Saturday, on a Sunday. But it definitely would not have been possible with the entire team. So that is a great success factor. Why did we have to speed up the process? We had to speed up the process because the tender season in Denmark was due. So we need to hand in the final state road contract tenders. So you have to finish before the tender season, and when you have to hand it in, because then you can control what you hand in. We were able to control it because we closed the deal pretty much 1-2 weeks before it was shifted by the state of Denmark regularly. And what we achieved is Denmark has 5 state road contracts for the entire country. It's only 5, and they tender always 5. In the past it was for 4 years, now they changed the system to 6 years. So there was a very critical tender season. Before the closing, we had 2 contracts. That was Nordic Road Service AS. After the tender season, we won all 5 of these contracts. So what we have achieved now is we increased the market share from Terranor from 40% to 100% in Denmark. That is a great success. To be specific, it's not a monopolistic view here, because there are also, of course, other state contracts. But for the state road contracts, the 5, this is Terranor who's doing it right now in Denmark. So if you're driving to Denmark and something is not accurate, I think you have to call me now. Then I have to fix it. Another important item that is for me personally extremely important, this is how I manage it, is centralized functions. This is a business which is very decentralized, so we have to think about sites, right, which are operating these areas of roads independently. And that is what their core strength is. Nevertheless, there are functions which should be centralized. Tendering, for example, that should be centralized. Procurement, because if you have the knowledge over the country, what the costs are, you can optimize it cross-country and within the country. If we have decentralized organizations, they optimize locally, but they do not always see what can be improved in other areas, or how they can improve by using benchmarks, for example, or negotiation successes in other areas. Fourth item, and that is a bit fluffy, but I firmly believe in this is entrepreneurial spirit. That is not only a strong force within Mutares. We see that everybody is extremely entrepreneurial in what we do. We are able to pose and discuss disruptive ideas on how we can change businesses, and that is why we are very fast and dynamic in how we can adapt businesses. If we bring this knowledge or this mindset and the Mutares values and part of the Mutares values to our companies, what we did here with the vision, right, being first in mind of road operations and maintenance, we can have the same dynamic, the same speed, entrepreneurial drive, as a condensed word here, in our participations. And that is one of our key success factors. So people make the difference. Nevertheless, and that is now entering to the optimization phase, or the end of the optimization phase, I also wanted to provide an outlook which is substantiated. So at the end of the year 2021, we expect 141 million euros of revenue. Initially, it was 105, but now with the add-on acquisition, the additional sales, we were able to increase it substantially. The adjusted EBITDA will reach, although it was in the past slightly negative, sort of break even, 6.4%, which is a massive increase. And for 2022, as I mentioned, my contracts are long running, so my forecasts are pretty stable. There's not a lot of things which can change or impact, more to the upside than to the downside, because you can win a contract on top, and this number doesn't have all the upside included. So there's also additional upside. That is why the can be greater than is 165 million euros and more than 13 million euros adjusted EBITDA, which then should equal around about 7.88% adjusted EBITDA margin. A couple of strategic pillars how we achieve it. Once again, I would like to establish the Terranor Accelerator. In fact, it is already running, and that is the gap-filling initiative of our procurement spend. The Nordics function differently than Central Europe, especially in supplier management and subcontractor management. They have different mindsets, they operate differently, they are more partnership related. And that is why the Terranor Accelerator focuses on strategic partnership programs. And we want to create a win-win situation, not only for us as Terranor, but also for our suppliers. And this is how we can all become better. This is the Terranor Accelerator program. Second one, Terranor Academy, as you heard it. We see it is working very well to motivate people, teach each other, reinvest into people. That is why a reinforcement in the future. We had a lot of very positive feedback, and we see the impact on the site level, and you've seen it, the overachievement on the contract operations. It is working. A side-by-side task force, optimizing each contract independently in these areas, in order to bring best-in-class knowledge into a task force. I have site managers and area managers in different areas, which have different knowledges, and they are extremely good in what they do. If you combine this knowledge, that can become a force. And that is what I want to harness. A task force with combined knowledge of how you can manage best the contracts, how you can generate additional revenues by expanding state contracts with municipalities, and along these municipalities doing extra works, like a playground. Right? But this is where you have to have a presence first. And the last item is the M&A activity, which is very important. We are constantly working on opportunities for Norway. Right? And that would complete the mission in the end, to be first in mind of road operations in the Nordics. So far, I'm 3/4 of the Nordics. One is missing that we would like to close. That is my second last slide, which is actually only saying thank you very much for the attention. I was a bit quicker now because I think we are a bit behind the agenda. Nevertheless, if you have questions to the business, complaints concerning roads, if it is in Denmark, Sweden, or Finland, I'm very happy to take questions. Or not.
No, let's take questions. Are there any questions? But maybe before we have questions. So David was only half a year working for Mutares. And this is a guy who fits 100% to our DNA. And then we promoted David to be portfolio manager, one of the 7 guys who are running the entire portfolio. So he's not only in charge for Terranor. And what what you bring, David, and I think this was a brilliant presentation. Thanks a lot. But what you bring, and when he talks about his companies, he talks about the people. He talks about a lady working for us. She's called Mareike. She says this was Mareike's job. You know, he's not proud of himself. He knows that, I mean, he turned this business, he acquired another business as an add-on, and you see what he can do, and that's why we promoted him. He's a good guy when it comes to running people, and a really good people coach. But that's not all. He's also super transparent. And this business here, I mean, he always wants to play chess with me, which I dare not to do, for he's a really good one. But the reality is he's brilliant in his analytics. And that makes us strong. We make things transparent, right? The people, when you ask, why do you lose money? They simply don't know. And what you did here is really a very great job. So thanks a lot, David. And now questions, if any.
Yeah. There's one running.
Yeah.
Hi, thanks for the presentation. It was quite interesting. Isn't it a bit peculiar that you identify companies in foreign regions that you don't understand the business, but you identify the opportunities?
Yeah.
So what's the trigger?
It's a good question. Solution is probably abstract. So what I think personally is a driver how we identify opportunities, even though I have no clue about road operations before I joined. So what you missed, McKinsey was working mostly in automotive and assembly, so big automotive OEMs globally. So what I understand is automotive. Road operations is cars are running on the street. What I personally believe is if you have passion in what you do, and the passion of the team locally was to understand the business, and if you, in a respectful way, ask questions to the management, it's like how you actually do it, I would like to understand it. You get in a bit of data. Then I think if you bring in these two spices, salt and pepper, into the soup, you will always come to a conclusion or recommendations of what you can improve. So respectful discussions with the management, understanding the business in detail. This is an outside-in perspective which we can bring in. And I think it was an advantage that I didn't know the business before. Because then I can ask questions, stupid questions, right? And I don't fear to ask stupid questions as a consultant. You can come to abstract solutions with analytics in the end. And I think that is a force which made it happen for all of us to identify the potentials and actually seize it.
All right, thanks, David. I have the honor now to introduce the next speaker in the next company. We will speak now, continue with passion, actually. We had times in this transaction on La Paire, which I said before, where we were all passionate. And all our wives started to hate the transactions. And I think what we found on La Paire is a teamwork and a passionate teamwork. And it's not easy to jump into a Mutares team who was working days and nights for months and months and months with a passion of getting it done, of winning. And at the end of the day, to be part of this team. And I think what Mark did, and I'm happy to have you here, what Mark did is he was an absolute brilliant fit into the team. And he was not a guy coming from outside and now running the company, running La Paire. He was part of the team from day one. And I was so passionate, I would have run La Paire myself. Unfortunately, I was told I'm German, I'm not allowed to do that. So, and Mark is part of the team until today. And I think it's a brilliant match. We found one out of, how many people do you have in France? 65 million, 70 million, which perfectly fit to us, which fits to the business, which fits to our plans, our strategies. So that was the golden shot. Happy to introduce you, Mark Tenar. Show us La Paire.
Thank you, Johannes. Thank you. And thank you for welcoming me. To cover the project of La Paire, I would like first to introduce myself, telling you that I've been working for 30 years now, 10 years as a CEO, 10 years as an FD, and 10 years as a business performance director in different companies, Euro Disney, Kingfisher, the listed company in London, part of the FTSE 100, so where I could work in France, in Poland, in Spain, in Portugal, in Romania, within an English group, but also with some Russian implementation. So quite a multicultural environment, mainly dedicated to the B2B business, mainly in retail, in home equipment, in home improvement, because I have also been working for a company named Conforama, a leading company in furniture and equipment. So I know the market of the housing equipment and development for a while now. I've been working a lot on the repositioning and many things. So when came the discussion about La Paire, it was quite obvious that there was something that could be made around it. The home improvement market is having, of course, its own specificities. If you think about your home, you like to feel comfortable, you want to improve, you want to feel safe also. And what is very specific to that market is that you can have many ideas. I'm sure that in your mind you are thinking about, I'm having some projects, but I don't know how to lead them at home for the last 3 days, 3 months, maybe 3 years, maybe 30 years. And the specificity of that project is that you are having many ideas, you know your problem, but you don't know your solution. And this is very specific to that market. La Paire is a multi-specialist of that market, meaning that when you are having several categories, it is the reason why you go more frequently into a store, because you are covering more categories. And then, of course, for us, it is to return with a long-term and sustainable way for the business, with the customer development, with the employees' engagement, and of course with the value creation we want to do. But at a glance, let's look at what is today La Paire in France. It is fully implemented in France. The level of sales represents 600 million euros. We are having 130 stores, 126 in France, in continental Europe, in France, also 10 plants, and this is a specificity of the market, is that this company is having plants and stores. And there is a flexibility, interesting flexibility into that, as 2/3 of the production of the plants are sold to the stores, and the stores are buying 50% of their products sold to the plants. So this brings a capacity to develop not only this segment of this way of doing the business, but there is also a B2B approach, both from the plants and also from the stores. You can see that the split of sales is, there is a main part that we can see with a bathroom and kitchen, but in fact, the main part of it is around carpentry, doors, windows, internal, external. This is the main part, and this company has been created in 1931, and the core DNA of that company is on the carpentry, but also doing bathroom and kitchen furniture. It is a very large market, I will cover that later, where there are also many competitors. So what we are doing is that kind of product with the production of windows in wood, in aluminium, in PVC, also kitchens, also doors and other things. And we are also buying outside things like taps, shower columns, or tiles, and things like that. Looking at many things were already said about La Paire, but talking about the context of the deal itself. You can see the cash injection has been significant from the seller, in addition of the commitment of Mutares with 20 million, but it is also an asset base which is very important, that has been mentioned. The real estate part represents most of the part of that, and there is a large base of real estate into the company. Of course, such a deal is also related to some commitments. Should they be social? Because there is no capacity to do some layoff or closing of stores or plants before the end of 2022. There are also some points around the dividend policy, of course, related to the profitability of the company, and of course, for the reputational point, also some things about the way to negotiate things and to contact things. Alors, why going to La Perle? Why is it such an opportunity? I believe in the market into which we are working in home improvement and home equipment. You know, a couple of years ago, before the COVID, every company having a network, should it be about stores or things like that, because of the digitalization, it was seen as there is no more future for those kind of companies. I know that business for a while, and I can tell you that pure players will have very strong difficulties and will need a lot of cash to create a competitive, sustainable, profitable advantage into that. It's obvious to say that today because everywhere in the world the DIY market or home improvement has increased by a lot, but having the point of sales and having also the capacity to produce is instrumental into that. The second point is that La Perle is a fantastic brand, a very, very well-known brand that we will cover later. And moreover, La Perle was highly profitable. It was a jewel before, very, very profitable. So the point is not to find a model, but to refine a model, to rebase a model that did exist before with some competitive advantages. When we look at the market, you can see here with the index. Alors, when we talk about the market, maybe talking into billions, the DIY market in France represents more than 30 billions in France, okay, only B2C. 30 billions, La Perle is addressing 20 of those 30 billions, only B2C, and when we add the B2B, it's more than double, right? When you talk about just the B2C market, because those level of billions are not representative, DIY is 2 to 3 times more than sports, is 2 to 3 times more than furniture, is 2 to 3 times more than decoration, as an example. So it's a very large and very resilient market, as you can see. For decades now that I have looked at that market, when you're having a crisis, the improvement of the real estate on the DIY and home equipment does increase. When you're having a grow, it is also the opportunity to invest. Because the specificity of that market is that when you change your windows, when you have a new kitchen, the value of your real estate is increasing more than your spending, which is very different, of course, should you buy a TV or a sofa or whatever. So in terms of value, it is very key into that market. I was talking about the fantastic brand La Perle is here. You are having the ranking of La Perle, not to the customers, but to French people when you ask them, should you want to buy a window, should you want to buy internal doors, should you want to buy a stair, where would you go first? The spontaneous answer is La Perle, with that ranking. On the carpentry side that you can see on the left, on the right, to be fair, it's not that good compared to the carpentry, but the level of margin on the categories that we're having on the right is very strong. And the aim we are rebuilding today is to reinforce the legitimacy of the carpentry, allowing to develop additional categories with bigger margins. The history of the company, even if we come before the 2009, it was even over $1 billion of sales and very profitable, and you can see the movement that has been made. Like many companies, what did happen is that the managers could be changed quite frequently. There were some changes. There were some willing to do the expansion. I have seen that in different organizations, and so this is not specific to that company. And when you try to move or to develop, then you are less on your core activities, Then you want to centralize with some supply chain projects, centralization within a single warehouse, making the cost increase, and with having a low level of services. It is about creating some new IT systems that are very big, very strong, very long to develop, with a lot of cost, and it is usually what is made a kind of centralization. Our centralization, for sure, and we shared that before, there is a good things with centralization about the efficiency. But in terms of business, in terms of trading, you need to decentralize things. You need to have strong standards and letting some autonomy within things. The second point is that you understand that in this company there are some plants and there are some stores. And the culture between the two is very different. We understand that within a plant, you want an industrial process that is very lean and even more lean and lean and lean, and you don't want to change many things. And at the opposite side, you're having the trading, the stores, where the customer are changing the rules every day. And you can imagine that this combination of those two cultures was not very easy to manage, even if again, 2/3 of the production of the plants are sold by the stores, and the stores are buying 50% of their products to the plants. And there was a kind of split being made by that period. Moreover, you know, this company was communicated to be sold more or less 2 years ago, so you can imagine that the dynamic into it is not that easy. Structurally speaking, in terms of timing, how are we going to handle that? It's quite generic, classic, to say that there is the time to discover. I started inside this deal, you know, the 1st of June, even if we have made some studies before that, and then implementing as a second step all of the quick wins we can do and work on the more structural plans we want to have afterwards. I used to communicate, and this is communicated also with the teams, the way, you know, you take initiatives, because things are not working that well into the company. As an example, just the accuracy, where are the products, can you deliver me on time, in full, my order? We're having many issues into the company. It is what I call the master basics of retail that you need to fix. You repair, meaning you don't win with that, but you remove breaks into the organization. It is also, in many companies, you hear, I don't have the good IT systems and all of that, and usually the use of the existing system is not even optimum. I have seen that many, many times. So you reinforce the training, you reinforce many things, so you foster reinforce the fundamental points before moving on. Preempt is something that you can catch. You can see that the level of legitimacy of the brand of the market is very strong. The market share is not at that level, but it's accessible. We can preempt that, but we have to first fix the first things so we can catch that. And the third step is something, I don't know if La Paire one day will be the Zara of home equipment or something like that, but it's something to become more inspirational, and that will come as a third step as soon as the fundamentals are fixed, costs are correctly driven, the efficiency of trading is good, and then when you have caught your potential into the market. The potential of the market can be also within the offer, meaning we are having some holes in the racket, not that much, but some, but it is something you need to feed, because of course the market is having some evolution. In terms of figures, also to bring some targets about the business, 600 million of sales, and with a target to move to 750, and with a switch in EBITDA to move from -30 to +50 million. Of course, there will be a lot of part of efficiency. You can see that for sure it will not be only driven by your sales, but mainly by the overall efficiency. We have made a lot of analysis. What I can tell you is that from now, it is quite encouraging. The first insights we are having today are very encouraging, and it is what we are working on in respect of the timing I just shared with you before. So this is what I can tell you with La Paire. The conditions is that there is a strong brand, there is a market, there is a network of stores and plants. There is also some people that are very engaged. There is some very strong know-hows, both in the distribution and also in the industrial part. And I can tell you that there is also a very strong culture into La Paire, and they are willing to recover and get back to the position where La Paire was before. Thank you for your attention, and of course I'm ready to answer your questions.
Who needs the window? Ah, look, the first question comes from France, Mark.
Thank you. Yes, you mentioned the hesitation in the past between the B2B business and the B2C business as one of the reasons for the negative development. So do you intend to focus the future more on the B2B or on the B2C business?
According to the size of both markets, and as the critical point for La Paire is the volume, I will open the two. If we look at B2C, there are different ways to do it. Today, the B2B business into the entire company is 1/3 of the business, right? And 2/3 with B2C. However, we know that should we want to develop some more recurring business and developing that, B2B can be helpful. It can also be developed through different ways. Just a new person is joining the organization with this month in charge of a new franchise model. It could be mainly B2B, but also a combination with B2C for sure. And also, we are also thinking about master franchising. So I would say that the quickest can be made with B2C. But you know that when you change your windows, when you change your doors, I don't know many people doing that by themselves. So of course we offer the service of installation, but also we can offer the availability of products. You know, we have spoken about the low level of availability of products those days, and the individual professionals are also willing to get some products. The quality, meaning you are French, you know the quality of the products in La Paire are very, very strong. So I will continue to push where we are today and maybe check some opportunity to move up the level of production we can bring into the plants.
Any more questions? Questions from the last row are not appreciated.
Congratulations on the fantastic presentation.
Thank you.
Can you run us through on the EBITDA bridge and sort of, you know, how you intend to turn around that company so successfully at the end?
Yeah, but of course there is a part related to cost into that, and when we talk about cost, it is, you know, the level of purchasing we are having in the company is very high. Should it be in raw materials? Should it be for the products we are just trading, right? And when we are facing the circumstances into which we are with the overall increase, I will say that so there is a work on the cost base, productivity internally, staff, and all of that, for sure. There is also a part on the improvement of purchasing power we bring into the negotiations. And then there will be the increases of price. I believe that today into the market, and because we are also producing and we are having the availability of products, we will put in the selling price almost all of the increases of raw materials we will have on the market, meaning mainly for two reasons or three reasons. One is because we are having the availability, and today many of our competitors are having some challenges into that. The second one is that when you don't do the price increases, when the market drops, meaning you are caught two times, for sure. And the third point is that just when you can't, you know, squeeze your margin according to the situation into which we are. So the answer to that is the quality of availability and quality of service, bringing the sense of that. You know, La Paire is a business that is also using a lot of promotions. or the dream of everybody is to say that I am having a high-low model and I want to move to everyday low price. The reality that nobody in the world did succeed to do that. When it is promotions, it is promotions. When your business is built like that, so we have also that capacity to more efficiently manage the promotions we are doing. So let's say that globally speaking, it will be into that bridge. It will be what we can do on our own. It will be 1/3 of the journey will be made by cost, more or less, and the 2/3 will be on leveraging the purchasing and the development of sales.
Just try to figure out, is there a high percentage of marketing advertising cost, or it's not so important?
But today, when you're having such a company...
Yes, but I mean, structurally, you need to have marketing.
Yeah.
And what should be around the percentage, or ideally?
In a model that works in retail, from what I know in my past, it's between 2.5 to 4% of the sales. But of course, when you're having a low level of sales, it is a combination. What we are testing as an example, because when you look into the structure of the communication that is made by La Paire, you're having those books, those paper books that are very well known, and when you go through kitchens or windows, the digital answer is not that easy. So what we plan is not to cut those books, but to test the digitalization of them, because I think that it would be a too big risk to cut it. I will test that by regions or by stores. I will see. But I hope it answers your question. Thank you.
Quick question. What was the motivation from the seller to inject 240 million cash at closing rather than letting the company go insolvent?
That's for me. Well, we should ask Saint-Gobain. No, I think there were several motivations. So the first motivation is Saint-Gobain as a group decided on a strategic move to basically divest the areas which are very much connected to B2C. So you see that quite also in other countries in Europe, continuing that Saint-Gobain has moved them. Started under Chalendar and now continue under Benoît Bazin to divest companies in the B2C segment, number one. Number two, as Mark said, and as he's French, he said it very politely, on the cost side. Of course, a restructuring on the cost side potentially also includes layoff of people. And I believe that it's quite difficult for Saint-Gobain to lay off people in France without getting personal brutally punished as senior management. That was the second part, and the third part was what you saw is the pure loss making, and the pure loss making of the company, which was dragging on for years, and which cost money. And you can have money in order to solve the problem and create peace, but there is a certain point where you say, okay, that's enough now. And I think that was the main driver, at least what we were told. And we were the one winning at the end. That's correct. And they did. All right. Then, Mark, thanks again.
Thank you.
Very much. Well done. And then the last presentation is a company we talked before. We acquired from Magna 3 plants in Germany in the exterior business. And I'm happy to introduce the CEO to you. Mathieu, before this challenge, was managing the SDS group after we have reorganized leadership on this portfolio. And together we did exit the SDS group beginning of the year. So he took on the challenge in August this year, pretty new company. So if you ask questions, maybe some of them can't be answered after 2 months only running the place. But I'm very happy to introduce my friend and the CEO of LMS, Mathieu.
Thank you very much, Johannes. Hello, everybody. So first, to make the transition, to get your attention, and to make the transition between the industries, we speak automotive. It's a tough world. So just a quick video so you have an impression of what we do, where we are. So what you saw, that's the shooting we made for a week ago. So it's a brand new material, but you also see that the guys working in the plants are already wearing the LMS T-shirts. On the first day when we arrived and we made the closing on the 5th of July 2021, Magna was gone from the company. All the logos were replaced by LMS. So to show the commitment of the team that we found, and this is something that is very important to notice, and this is something which was, for me, extraordinary when you come from the restructuring world. So in few facts and figures, what is LMS? So it's an asset deal carve out from Magna, closing, as I said, realized on the 5th of July 2021. I will call it a typical Mutares case: 360 million revenue, minus 35 million EBITDA, 1,750 employees. And we are on 3 plants in Germany and some satellites around those plants. And I will come with more details on the footprint and the specificity of the plants later. Mutares committed to 10 million for 150 million expected bargain purchase. So the plants. We have 3 main plants. Obertshausen is the biggest one, located 20 minutes drive from Frankfurt, with 200 million. You have 2 satellites. First one is Regensburg. It's a sequencing site that we have directly with BMW. And the next one is KK for Klein-Krotzenburg, 10 minutes from Obertshausen. And the specificity of this plant is a truck business, but also we produce the black parts, and we organize the just-in sequence also for our customers. Sulzbach and Ida Oberstein, those 2 plants are 150 kilometers from Obertshausen, so on the way to France, close to Saarbrücken. What is the common denominator of those plants? It's injection molding. You see it, we have injection molding capabilities in all the plants. In total, 46 injection molding machines. We have very recent park of machine, very well invested, very well maintained, and we have a range from 320 tons to 4,000 tons of clamping force. What makes the business in the automotive are the tools. The machines can be used for whatever we want. So this is opening also a bit the horizon at LMS. I will go quick on the customers. We can see it later, but I mean we are supplying all the large European OEMs: Stellantis, BMW, Mercedes, AMG, Audi, and well, much more to come. We have 3 painting lines, and this is very important because this makes us who we are. We produce the parts, we are able to paint them, and on top of it, we have a galvanization factory, meaning that we are able to chrome parts. And our business is focused on exterior parts very clearly, but we also can enter the interior parts, and we will go more in detail. So what are the perspectives that LMS has today? So, what is core? What are the core technologies at LMS? I mean, I think we can say it's a one-stop shop for the OEMs. We are tier one. This is a privileged situation, let's call it like that. We are the new kids in the block, meaning tier one with 400 million. It's quite impressive for us, but we have anyway the trust from the customers since years. The plant didn't move, the people didn't move, the owner moved. Okay, we need to build this trust and continue to move ahead. However, what we have in the plant is quite incredible in terms of engineering, from the design to the conception, product development, process development. We also go into sampling, 3D printings to be able to show to our customers in which direction we go, but also organize the full pre-series, production series of the parts, and also the replacement part, which is a business anyway, which lasts 10 to 15 years after the series is gone. Testing, we have testing equipment directly in the plants because it makes sense. We shorter the lead times and we shorter the cost. But we also have a full testing facility in Esslingen, close to Stuttgart, as close as possible from our customers. So we are able to also get some business, not from the normal channels, meaning a purchaser speaking to a seller, but we go through the engineers and through the project management to bring the interest into LMS. Injection molding, we discussed about that. 46 injection molding machines. It's quite impressive. 4,000 tons of clamping force is also quite special on the European market. And that's the only reason why we are also able to produce bumpers, which is, of course, a tricky business, and only few players are on the market. Painting, as I said, we have 3 locations, 3 painting lines, and they are also very well automatized and very well maintained. And we are able to optimize the number of skids, let's say, on every painting line, and reduce, therefore, the consumption and the overspray of the painting. Hot stamping foil is coming in pair with the chrome plating. The hot stamping foil is actually coming into play when we are not able to chrome the parts due to some geometry or due to some specific designs. Chrome plating. It's not very usual to have a chrome plating company in Europe, as all the business switch the last 10 years in India or Asia because of all the materials that we are using in the chrome plating, meaning today we are in chrome 3 and the legislation will push in the next few years to go chrome 6. We are already going chrome 6 in order to take the advantage on the market, and also in order to capitalize, I would say, on what the COVID has created, means a disruption on the supply chain, means relocalization when we are competitive, and we are. Assembly, we have a great flexibility of assembly table, so we can go with a manual assembly for a very small series. I speak about AMG, for example, but we also go for fully automatized assembly line, multi-product and multi-customers. So this is, and they are all fitted by AGV, these automated guided vehicles, which you saw in the video previously. And of course, just in sequencing, for people who don't know what is sequencing, means that we are bringing exactly the parts which are called by the customers at the exact moment the car is moving on the line of the customer. So for you to have a bit some visuals, what do we do? And for you also to look at cars differently. Since I arrived in LMS, every time I see a car, I ask myself if we did that, or how it's made, or how can we do it in a better way. So we do, let's say, all the front-end modules, bumpers, all the rocker panel, side panel, roof panels, well, name it, in terms of exterior parts, that's the focus of the company. However, again, the machines are capable to do much more, and our engineers are also able to do much more. So we see definitely some interest for the interior parts in the next future, but also some other industry, and we will come to that. So, what did we find, and where are those plants coming from? So they are coming from, let's say, a quite comfortable production sales or revenue level. You can see in 2017, the biggest plant, Obertshausen, had around 400 million. 2020 and 21, what we found, it's shrink by almost half. So that's the sad reality of the automotive business. If you don't go for business at the right time, well, you need to wait the next 3, 4, 5, 7 years, the time the new model is coming on the market. And at the same time also, well, I mean, the COVID, we understand also what was the impact and how this impacted the full automotive chain. In terms of profitability, well, I think it's also very clear. When the top line is not there anymore, the cost structure stays, belongs to a big consortium, a multinational company. As we said earlier, for reputation, they are not able to do what we are able to do, and the flexibility that we are able to bring, and also the power we bring into the restructuring or transformation of the company. And therefore, as of today, we are between -10 and -15% negative EBITDA. That's the situation, and that's why I say it's a perfect Mutares case. At least all the cases I was given were like this. We don't have to spend too much time on this. I mean, COVID crisis, we all know, but what we don't necessarily know is the impact and the disruption it created on the supply chain, on the overall supply chain. And we had at this time people sitting home and well, spending a bit of time on internet trying to buy some new home appliance or new electronic gadget. And well, we also use semiconductor in all those gadgets and all those home appliances. And automotive business, the need of electronic chips in the automotive business worldwide is 9 to 10%. So the car manufacturers underestimated a bit what could be the impact on their industry, and that they will not be the first one served. And this is the impact that we see, of course, today. Today, the OEMs are parking the cars on their parkings, are mounting the analog systems back as they don't have enough component to build in the digital components. Raw material, well, okay, this happens, but it's also. For me, I always see it. I also always see the bad things as a positive outlook. I think we arrive on time. We see the light at the end of the tunnel. A year and a half ago, well, I would have been a bit less optimistic. But what's important? So we saw the situation. We saw that the top line drop. We saw that it's not profitable business as of today. But where are we going, and what are we going to use to be able to transform this company? Clearly, the technology asset, as I said, very well invested plants, huge capacity to be able to produce, so to go into new product portfolio, to also go to new industries, and of course, new customers. High know-how, and this is what I say from the beginning. I was quite impressed, but this also belongs to the automotive standards, and I think Magna is famous for this. The people are really competent, and you have engineers with 20, 25 years, 30 years of experience. Is it good? Yes. Can it be challenging? Also. So we need to open a bit the eyes of those guys and bringing a bit of fantasy in order for them to use all their knowledge, all their competence, and develop new product, as I say, and drive the innovation. That's the spirit of the automotive industry. Automotive industry is globally in a full transformation, and therefore you need to drive the innovation if you want to have a piece of the cake. Strong customer base. I can say whatever I want. LMS was awarded the second month, so in August, 90 million business by Daimler. That shows the trust they have in the facilities. And also show the trust they have in Mutares to restructure the company. M&A add-ons acquisition, I mean, LMS is a perfect investment platform. So my friends from the M&A are having a lot of fun at the moment. And as we said earlier, automotive business is in transformation. Therefore, you're going to have a lot of work on the table. Operational improvement, well, that's what we do, and I will jump to the next slide, so we will be able to discuss that in more details later. What do we want for LMS, and what are we convinced? So we are convinced that we're going to go to 6 to 7% EBITDA margin, because that's where our competitors are. And second, this is where we were in 2014. For example, Obertshausen had 6.6% margin. Ida Oberstein, if you remember the slide before, 17% EBITDA margin. So that's where we're going to go. And how are we going to go there? How will we make the bridge? And we had a question about the bridge earlier. We will go from minus 10, 15% to 6, 7% by three major levels. The first one, operational improvement. Robin talked about that, Johannes also. Well, we cut costs. I'm coming from a purchasing background. This is a lot of fun also to be able to rationalize the supplier panel. We have 12,000 suppliers for 3 plants. So the monster was created, of course, when you have multinational companies. Do we need that now? No, of course. Do we want to take the risk of the supply chain? No. So we also want to be able to localize and rationalize and getting some purchasing power. Same time, we go into VAVE, meaning we go into technical discussions with our suppliers. Customers are pushing the engineering development to us. If we don't push it back to our suppliers, we get blocked at some point. So VAVE means we look at the specification. We look if we can change a material, a cheaper material, flexible material. Make or buy strategy in sourcing. Today, LMS has 40 million of plastic parts and chrome parts which are purchased on the market. We want that back, and we're going to take it back. Increasing production efficiency, effectiveness, this is what we do. Reducing cycle times, changing a shift model, finding the flexibility that the plants need in this automotive world. Logistic cost, we have plenty external warehouses. We don't need them. We can do it ourselves. The biggest lever is, though here, organizational restructuring. So, of course, we will consolidate and centralize the function. We don't need local purchasing. We will go for central quality, central engineers, central HR, central sales, to have one voice to the customer and also one voice to the internal functions. At the same time, streamlining the roles and responsibility, this is what I like to do. I'm convinced that if someone had a job description 25 years ago, might not be the same job description that you want the guy to do today. So simple redefinition of the job description and associating some goals and objectives at the end of the year. And we will have to go through a social plan, which is already initiated. Will be in 2 phases. First one, Q2 2022, and the last one will finish in end of 2022. We speak about 15 to 20% of the total workforce. But to the last lever and to drive and ensure the long-term profitability is definitely the top line. Top line, as I said, we will be generated first by the insourcing of all the plastic parts and chrome parts that we have outside. But we will be also very much more aggressive in the RFQs. And I really trust that the competitors of yesterday might be the partners of tomorrow. We live in a world where the OEMs never have been so fat. I don't know if you saw the last profit report. The pressure is coming on the tier 1s, tier 2, tier 3. Most of them are suffering. So it's a moment that we also try to ally. And this is what we are currently doing, by the way, where we didn't have access to some quotation process because of the closing. We are able to jump back on this project, and actually we just get awarded today as a tier 2. There is no shame. There is no shame to be tier 2. So where do we want to go also in terms of top line? I'm fully convinced that, well, if you are good at what you do, why are you changing it? So I really trust that we will stay into our existing business, which is the cars and the trucks. Johannes said it. I was in STS previously, specialized in truck business, so I also very much convinced that we should go more into this business. The potential that we see, 50 million plus, I will insist on the plus, and this is on the annual base, bringing 4 to 6% margin. I think, David, you were speaking about 4%. We are in the same world. That's automotive. We will, of course, go for more customers. You saw the footprint of the plants. Actually, it's perfect in Europe. We are so close to the biggest OEMs, so we just need to intensify it. And what you see here on this side, that's all the potential additional customers that we can get within a range of 200-300 kilometers. So which fits exactly LMS. We will also go into the commercial vehicles, which is a segment which is actually increasing at the moment, and the motorcycles, because that's what we can actually do. And we will use also the synergies with the other Mutares company portfolio. We are already quoting for Zabo to produce all the plastic parts, and we are also in touch now with John Deere. Funny enough, we are chroming some Lego for their 90 years. So I think that's the first time you might see a chromed Lego version. Again, we want to approach some other industries, still with the focus of automotive, but go definitely in home appliances. And I trust that with Mark at one point we will have to discuss what can we do in plastic part for La Paire. I leave you on the mission and the vision. That's for you. If you have any question, I'm happy to answer that.
So Mathieu, I asked you whether to take over the STS challenge. And this is a man of action, right? It was at my barbecue place and at my house. And then I asked him, Mathieu, I have a really difficult situation in the STS. So I had an Italian business which was underperforming, cash needed. Also due to COVID, was really tough. And I had a German business which was too much overhead cost. So I'll give you an example. We had 17 bookkeepers there. And Mathieu finally did it only with 2. And I asked him, can you do it? And he speaks as a man of action. He says, yes, I will take over. And it didn't take long. Then he took it over, and then he was able. And we had a business with Volvo in the US, and he negotiated the contract with Volvo for 25 million. And what he does here, I mean, he said, and I hope that you heard all of this. We were awarded by a 90 million business from Mercedes. This is not something which is easy for us. For we are the restructuring guys, but getting new orders in, and you said even today, you are awarded as a second tier. So great applause to you. Great job. Thank you.
Thank you.
So I think this was an exciting day, and it's not a one or a two-man show today, right? We have our country heads who are here, so please talk to them. It's interesting, and it's also good to get them knowing. And we had now 3 presentations, and these 3 presentators, I think it was so motivating for me to listen to them. They want to really restructure the business, and was really a very, very good presentation, and I'm really proud. I mean, this company has now 150 super motivated people, and I think this is the success of Mutares. And I thank you as investors to be on the screen or to have joined here in person today. And I think the evening has just started, right? So I'm happy that Mr. Schwarzer, who's here in this office, is the M&A of Frankfurt office, head of M&A, and I'm happy that he's here now. Maybe you'll party with us tonight. And I would like to hand over to Johannes.
Thanks very much, Robin. I don't want to add a lot. So we're here. Yeah, the sky's the limit, as I said before. We explained to you, and you understood, I think, very well that we work extremely hard to skyrocket this business. I can assure you, we can party even harder. So also there, the sky's the limit. I'm gonna invite you now, stay here with us. Drinks will be served. DJ has arrived. Guests are coming. So enjoy your evening. And thank you very much for being here. Thank you very much for listening. The difference is we have drinks. You have to open that yourself on the screen. And looking forward to see all of you latest next year at maybe the same venue at the same time. Thank you very much. Enjoy.